Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome and welcome back KS family. I'm grateful to be sharing this time together. We can see that on the back of the producer price index, the crypto market didn't react very well. A lot of people are searching for the answer, but if you're following the charts, you already had a pretty good idea that this could occur. In fact, we discussed it in yesterday's video. Crypto technical analysis is all about having the foundations, looking beyond the charts, collecting probabilities, checking world events and checking the stock markets, understanding how all the tier 1 charts interrelate with each other, then popping back inside the crypto market, finding the market's focus, understanding that opportunities reset every single day. Even on blood red days, there's always something cooking inside crypto. Enhancing your pattern recognition is incredibly important. The way that we become more of a financial and emotional blessing to ourselves and those we love is to focus on positive excellence. This is all about mastery of emotional control. If we don't master our fear with courage, our fear will kill our profitability and our bank accounts and our relationships and just about everything else in life. There are many ways to buy and sell profitably, but we must do all the other steps beforehand. A lot of people get really confused, but I thought, Ken, that technical analysis was just putting some sort of indicator on a chart that tells you to buy and sell. That's not what crypto technical analysis is all about. It's a smart money method of looking and understanding financial markets. Indicators are terrific, they're good. You should always do anything that helps you out. But the focus of crypto technical analysis is not an indicator. In fact, inside crypto technical analysis, we rarely use indicators. Why is that? It's literally because of rule 673 from the masterclass. Choose learning and success will choose you. You must know what you're doing inside financial markets. I've been fascinated by financial markets for more than 36 years, which is when I was doing my finance degree. Trading is a serious business. You must understand the blueprints of the market. What are the blueprints all about? That's understanding your tier 1 charts. That's understanding current events and the news, but contextualizing it in such a way that you don't get feared out of the market. As crypto technical analysts, we understand a TA that goes far, far beyond conventional technical analysis. We look at charts in a way that other people can't comprehend. The best parallel that I could give, if you were to look at an ECG and you were not a medical professional, what is happening with this ECG and what does an ECG even relate to? A lot of people simply would not know. They would look at this ECG and say, simplify it, just give me one line. Better than that, give me a traffic light indicator. Is it red, is it amber, or is it green? Life is not like that. All professionals have deep levels of skill. If you want to build a house, and a house at that, you need to have the right blueprint. And not only that, you then need to get the right materials. There's a lot to success in every field and endeavor. You'll find that your mindset is either your help or your hindrance when it comes to financial markets. People want exact certainty. That's a really hard thing to come by in financial markets. It literally doesn't exist. All we do is balance probabilities, and one of the best ways that we can do that is with our 3-dimensional risk management code called the CTKS code. I developed 3-dimensional risk management because people were thinking in terms of only one direction, either up, either down, or either neutral or nowhere. But traditionally it's either up or down. As professionals, we know that we control the trade or investment, but it's the market that controls the return. And that return is always based on your active learning, your knowledge plus your courage. The market always penalizes blame, a lack of knowledge, and gambling. There are no shortcuts to success. The most successful people in life, but especially inside financial markets, do not focus on the money. They focus on their persistence, their commitment, learning their system, not allowing fear to overtake them, especially on red days. The professionals are buying today whilst everybody else is leaving. It takes a lot of knowledge and experience to apply this rule correctly. Rule 621, buy on red, sell on green, commonly referred to as borsog. The Fed's restrictive policies on monetary tightening saw jobless claims rise to their highest levels since 2021. The producer price index actually came up, but less than anticipated. The Fed is seeking to create demand destruction, and initial claims for unemployment are showing that it's working. We can see the Consumer Price Index, CPI, and the PPI are both coming down. The next FOMC meeting in around 34 days, 91.7% probability of leaving rates unchanged by the current target rate from 500 to 525. Note that 1 day ago it was nearly 100%, in fact 99.6%. Just like an architect, the Tier 1 charts give us the blueprint of the current health of the financial markets, and they all intercorrelate and interdepend on each other. What we saw in yesterday's price action, when the CPI data was released, the S&P literally rallied, fell down and rallied again. When the PPI occurred, what happened? The index dropped down and then sought to recover. Fairly similar price behavior to the past session, but of course much weaker. As crypto technical analysts, we seek to uncover the financial blueprints of the market, just like architects do. We know in order to build whatever we want to build, we must know what we're building, and we need to know the strength of the structure. Or, like a medical professional, we know how to read complex signals and understand them. To do that, we have to understand where the smart money is buying and selling. What is the difference between Stanfield lines, or SLs, and Stanfield zones, which are called SCs? Stanfield lines are the backbone of the financial market. SCs are pressure points. Pressure can change over time, but the SLs do not change. Stated another way, SLs are what you're after. SCs give an approximate idea. What we actually saw with the S&P 500, it rallied through a smart money sell level but couldn't make it to the next one. What happens when this happens? Price will come back down to the next smart money buy level. If it fails to do so, it will fall through and get a safety net. And this is what these zones are about. They're all about roofs and floors. When price comes down really hard, really fast, it can go through multiple safety nets. Why is this happening? Because of panic. When price spikes up, it can go through multiple ceilings. Why does this happen? Same reason. It's because of panic. One is the fear of loss, and one is the fear of greed, the fear of missing out. Looking at the DXY yesterday, we saw that the CPI, when the CPI numbers came out, the DXY just dropped off a cliff, but it was caught by two safety nets. Without this understanding, you'd be looking at a price chart like this. You would be saying, where's the support? I don't know where the support is. What we do with the CTKS method, it's the world's most advanced support and resistance system, but it's support and resistance for all levels of the price structure of a specific asset. What you can see very clearly is price was caught, the DXY was caught in these two smart money buy areas. Then it couldn't make it up to the sell area, came back, retested, reconfirmed, did not break down again. It was on its way back up. And we saw in yesterday's video that it was charging up. And of course, this is a smart money sell level. What happened? It tried to get above, punched down below, and then made its way up. But the question is, it stopped. When we were doing the video, it looked like the thing would go through the roof, but we know where the smart money sell levels are. We know what's going on. We're not guessing, we know. Because we have a very specific scientific methodology, which is the CTKS method. And then what happened next? As the DXY charged up, where did it hit next? Of course, a smart money sell level. And we can see it's having a little bit of trouble breaking over this 102.159 to 102.221 level. It's currently underneath that. What does this mean? If it can't hold on to that level, if it turns into resistance, it's making its way back to 101,778. You will find time and time again, and we prove this out literally 7 days a week, 365 days a year, that price ping-pongs between smart money sell levels and smart money buy levels, smart money sell levels and smart money buy levels. If you get into the synchronization pattern of the market, if you get synchronized, you're going to do very, very well. We can see the NASDAQ, another top tier chart. It's making its way through a very heavy smart money sell area, but it is grinding upwards. When we look at the impacts of the CPI and the PPI on Tesla, what did we notice? Tesla was above a smart money buy area. This buy area was so strong, price didn't even enter it, and we can see price marching its way forward. The CPI's release yesterday really moved markets, and the PPI's release today has also moved markets. That's why yesterday I put the PPI on the charts for you to be prepared and not scared. If you're in the masterclass or the CTKS method, please make sure you tune into the daily videos. They provide very timely information. What we saw with gold's behavior, and this particular chart is marked up since 1833, we saw that a smart money buy area and then a smart money sell area. Notice these smart money buy and sell areas getting tested. If they're too weak, if they can't make it up to the next one, they're going down to the previous one. If they can't make it back up and stay there, they're going down to the next one. In all probability, what do we see with gold's current price action? We notice this underpinning support has been broken. If we get continued negative momentum, we're heading down to around the $2,000 level. We may get a retest that may not go all the way up, but if it goes all the way up, it may keep on going up. Be aware of this. What we're always trying to determine is how price actually moves. Is it going down? Is it going up? Which way is it going? This is a very, very important skill that you need to develop. When people first get into financial markets, they don't understand how the markets work. They're in the panic zone. They're addicted to the news. They think that the news actually moves financial markets. Smart money has already acted before the news ever came out. In these two zones, Zone 1 and Zone 2, people crave certainty, and certainty creates terror. It's just an unfortunate thing that happens inside financial markets. Talk to anybody that's been in financial markets for a decade, 2 decades, 3 decades, 4 decades plus. You'll understand they don't care about certainty. They care about probabilities and their rules. They're very structured in how they do what they do. They understand percentages. They make three-way decision making. They have patience. They have a lot of rules. They know price is reality, not what they think price is going to do, but what price actually does. A lot of people tend to stop at Zone 3, but Zone 4 is really where you want to be. It is all about wealthy thinking, and wealthy is not about money. It's about enjoying everything that life has to offer. You can have very little money but have wealthy thinking, or you can have massive amounts of money and have very poor thinking. It's not about money. But however, there's a caveat on that. Inside Zone 1 and Zone 2, it's almost guaranteed that people will lose money in financial markets simply because they don't know how they work. Zone 3 people have been hardened by fire, and Zone 4 people understand that money is not everything. We can see that Bitcoin is currently 26,874. What you notice actually is when the CPI came out, there was a big push in price in Bitcoin, and then people realized what was going on, and we structured the charts yesterday and we explained this big dump down. But the buyers were still not permitting it to get down to this smart money buy area. So what did it do? It came back and retested. We can see that that support was not held. It got penetrated and it didn't hold up. And then the PPI came out. And what did the PPI do? It just pushed price down. But notice this smart money buy area. It's actually acting as a lot of interference for the sellers between 26,677 and around that 26,584 mark. Now remember, it's the SLs underneath these SZs that actually count, not the SCs. What we actually notice here as well, the sellers are restricting Bitcoin's price. What if we get a bit of a push up to retest that and it actually goes higher? We may see something like this in the very short term, trying to come back and challenge this smart money sell area. What happens if price goes the negative dimension? And this is all part of our three-dimensional risk management. If price is really weak, it will pass through this smart money buy area, showing that the buyers are not there. It will likely retest on its way down, potentially to around the 25,882 mark. We know from our three-dimensional risk management that price doesn't have to just go up or go down. It can go flat as well. What happens if we get some kind of bouncing along here? This is also on the cards. Just beware of thinking in terms of three dimensions all the time. Your three-dimensional risk management is really, really important. If you're doing it properly, you're creating a CTKS code each and every day. You're looking at what the market did. The market came down in terms of Bitcoin. What could it do tomorrow? A lot of people would consider that there could be a follow-through, but what percentage would you give the down, the neutral, or the up case? And don't forget, the market's like doing what people don't anticipate it's going to do. That is why your synchronization factor is so incredibly important. Therefore, when you look at the up case, the down case, the neutral case, what you're actually doing is assessing different probabilities. Price will undoubtedly reveal itself, and you will know which case is actually coming true. Learning is a huge part of what we do as a global family. We're focused on learning as well as inner peace and outer peace, gratitude and happiness. Your persistence and your commitment are absolutely critical to be successful in anything that you focus on. The reason that you look at tier 1 charts, they're important. They're really, really important. The stock market, Forex, yields, they'll tell you so many things about what the market is actually doing. We can see after the CPI and PPI data came out, the crypto market has been hit, but not just crypto, so many different things have been hit as well. Learning how to do your three-dimensional risk analysis is really, really important. We could see an upward movement in Ethereum up to around the 1880 mark. There's a lot of shorts in the market. If the longs come in and they liquidate the shorts, we could get a move up like this. It could be a climactic move up instead of one down. When we look at the downward case, we may see that smart money buy area tapped around the 1693 mark. Just keep that one in mind. And if, of course, we move in a consolidating phase, we may move just within this smart money buy/sell area. Solana is an incredibly good crypto to look at. Why is that? Because it tends to over-exaggerate Bitcoin's momentum to the upside and to the downside. When Bitcoin is selling down, typically Solana will sell down more. But when Bitcoin is spiking up, typically Solana will overextend that particular move. It's very, very powerful. If you were in Solana, just say around that 2266 mark, and you can see this smart money sell area here, and you were thinking, if this thing drops, if Solana drops, where is it going to drop to? Well, your answer would be through objective dynamic market structure around the 2111 mark. If it couldn't get through there, where would it be going next? The answer, about 2005. If it gets above that and starts to rally, where is it going next? Around the 2112 mark. If it can't hold that, where is it going? Around the $20.04. If it can come back, where's it going? Around the 2113. You get the idea. Inside the CTKS Method service, all of these charts are already marked up. Solana is a Tier 3 chart. When people are inside Zone 1 and Zone 2, they do not wish to apply Rule 673. Choose learning and success will choose you. They basically say, I prefer to spend more time planning out what I'm going to do with all the money that I make from the markets. It doesn't work that way. You must put in the hard work. Unfortunately, it's just a rule of life. If you place money into financial markets and you're just gambling, you know the house is always going to win. But if you become like a professional gambler, well, that's different because you've run the numbers, you know how things work, you've calculated the odds, you know what you're doing. That's why a lot of casinos ban professional gamblers. It's not for no reason. In order to learn effectively, you must have a structure. The most critical thing that you can ever do is to get your foundations ready. Then you need to know all of that kind of boring stuff, like what are the stock markets doing? What's world events? What are they up to? And collect probabilities. Why do you do this? Why don't you just throw an indicator on a chart and be done with it, one that you don't understand how it works? Because, like most things, if you don't have the knowledge, you don't actually know what you're doing. Could you imagine playing this new game called tennis and not knowing the rules, or going onto a golf course and saying, I just want to hit the ball, but I don't know where to hit it. Maybe I'll hit it in the other direction of the hole. You must know the rules. This is what life is all about. You don't have to agree with the rules, but you have to know them. That's literally what learning is all about. When you choose learning, you understand the rules. When you understand the rules, you apply them. When you apply the rules, you win. It's as simple as that. There are no ways to shortcut this learning of rules. It applies in all areas of life. When you think about success or failure, if you're truly successful in a particular area, it's because, consciously or subconsciously, you know the rules of that area. Please let me know in the comments, what do you think about rules? How important are they? There were so many beautiful comments in yesterday's video. I just want to reach out and let everybody know how appreciative and grateful I am. A very big congratulations to Tales from the Man Cave, who was subscriber 001 to the CTKS Method service. Well done, Tales. Tales said, if anyone is on the fence about taking advantage of the initial entry price and becoming a foundation member, I strongly suggest giving it a try. It's much more than I expected, and it will keep on growing. That it will, my friend. And thank you so much, Beardy. Beardy said, already worth its weight in Bitcoin. We have such an incredible global family. Something interesting just happened a minute or so ago. You noticed that red was coming down in Bitcoin's price. It hit that smart money buy area. So many people would have thought, well, it's just going to collapse through. That's that. It's going to fall off a cliff. Well, it still could, but the concept is these smart money buy areas are exactly that. Smart money sell will restrict price from going up. Smart money buy will act as a safety net to try to stop price and reverse its course. This is the power of the CTKS method. Many people in our global family have the CTKS creed on their desktop, hanging on the wall somewhere, or on their phone. It's a powerful, powerful thing to reflect back on. One part of mindset is just creating better habits, which create a better life. We know that all results come from the mind, and a better mind creates better outcomes. That's why we do daily positive affirmations for abundance, financial success, and happiness. Let's go through the CTKS Creed. It's been a while since we've read it out. I know the universe is designed to make me succeed. The I is you. You need to say this with conviction as well. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. Positive excellence is a powerful thing to embrace when you find that you're going through a life pullback and there's so many things that can pull us back. Dealing with sickness, loss of a loved one, separation from family, relationships breakdowns, conflict, addiction, sadness. There's so many things that can pull us off a life rally path. But always remember that pull back is before the upsurge. You'll always find that you hit resistance in life. Just expect it. It's always there. But when you're getting a setback, that is actually a setup or support for your next life rally. People talk about purpose and destiny like it's an esoteric thing, something that just can't be imagined. But it's really simple. Purpose and destiny are always the same for every single person. When we spread more love, kindness, empathy, and care around us, we receive the benefits of that. Your kindness could change another person's life. If we can't do it for ourselves, we can do it for other people. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. The sun will come out again, and there's always hope, and a very special call out to Billy. The CTKS family are with you, my friend. And to all people going through issues, we're with you as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.